It's a wild last 2 weeks in the stock market with a shooting war going on in the Gulf and the Fed being boxed in. Let's connect the dots. And tonight, President Trump has a primetime address on elections and other topics, he says. 9 a.m. Eastern, 8 p.m. our time. I'll flag what you probably should have noticed last night in the speech. It's Friday, July 17th. I'm Charles Brown, your portfolio manager, and this is the weekly CB3 Financial Podcast update. So the S&P is flirting with making new all-time highs, a record close in early June, nothing much since then, and it's clawed back to 2 straight winning weeks, and that's a good thing, up about 10% on the year. Equal weight is keeping pace, not just the 5 megacaps carrying the tape, and that's, of course, unusual because for the last 7 to 8 months, it's been nothing but the megacap stocks. So we have 2 programs, as you guys know, MP, which addresses the fuller market and is up actually a little higher than the S&P on the year, and discretionary strategies, which is getting beat up a little bit this week, but is having a good year other than that. So the wall of worry climbing despite a Gulf war and a closed shipping lane in the Strait of Hormuz, and a Fed that won't cut. That's resilience in the stock market, and that's what we want to see. So my caution is healthy breath equals not cheap, all right? The valuations are full right now, which is why we're not doing a lot of additional buying, all right? We're at the highs with not a whole lot of upside left. We are prepared with our option hedging in DS, so if we have a downside move, we should get some cushion from that. I do think the ceasefire is real on paper, but fake in practice. And that's because the mullahs really don't have an interest in stopping this war. They want the sympathy vote from the rest of the Middle Eastern nations, and that's why they're doing what they can do. J.D. Vance himself called it a fragile truth with both sides violating it. The Strait of Hormuz, as I just said, is still effectively closed with Iran charging north of $1 million a ship. All right, so why is it that Iran is able to charge any rates at all? I mean, it's just inexplicable. I'm hoping we're going to learn that on the speech tonight, and by the time you hear this, you might know a lot more than we know at this moment. The U.S. naval blockade still in place, and 20% of the world's oil is moving through that checkpoint or crawling through that checkpoint, and it's a standing risk premium under energy and inflation. So the portfolio angle is this. As long as the market perceives that President Trump is not going to let this get out of hand, markets are going to stay near the highs as long as the earnings reports keep strong. And so far for the third quarter, which is looking back on the second quarter earnings, the reports are pretty strong, and that's in our favor. It's probably not as happy a job as Kevin Warsh was thinking it was going to be when he became Fed chairman. Right now, Powell is out, Warsh is in, and he is hawkish. He is saying the rate held at 3.5375 the next meeting at the end of this month. But the reality is that the markets are pricing in no rate cut this year and actually a 19% chance of a hike. So it's not what President Trump wanted, but it's probably what the economy needs. If you've been trying to buy a house, I remember paying 6.25% in 2023, early 2023, and it's higher than that now 3.5 years later. So that's not what we want to see. Why is this? Well, inflation is actually re-accelerating. The May CPI at 4.2 year over year, and the closed Hormuz energy pours fuel on the fire, no pun intended. But until we have free shipping lanes over there, not free in the sense of inexpensive, but free travel without being hindered by the Iranian government, we're still going to have issues. So tonight, the speech is expected to be about basically the unfairness of elections. I think President Trump's going to go back and try to relitigate 2020. I'm not sure that's a good strategy, but he's probably going to do it regardless of what I think. Usually the party in the White House loses House seats, but not necessarily the Senate. And that's the way it's playing out this year. I've been saying for at least the last 6 to 8 months, probably almost a year, that I do not think that the Republicans will lose the Senate. Although it doesn't help when you have a senator from South Carolina, a very strong one in Lindsey Graham, who suddenly passed away. And then Collins up in Maine has a kind of a crazy race going on there. So, but I still think that you're going to see in the end at least 51-49, probably 52-48 in the Republican majority. So the market translation here, markets often shrugging at this divided government, so I don't really see that as a problem. We have a really smart man in Kevin Warsh at leading the Fed now, and that's I've just really been impressed with how he's handled himself with the congressional beatdowns from Elizabeth Warren and other people of her ilk. So the bottom line is this: records up top, war underneath, a Fed that can't ride to the rescue, kind of an unusual mix. What we're doing with you guys is staying diversified, keeping some energy as a ballast, all right? We're not reaching for duration, which means in the fixed income portions, there is no fixed income in discretionary strategies, but there is in market proxy, just like there was in GI. And this fixed income is short duration, so we're not taking a risk on 30-year bonds here. That next catalyst for the Fed 28-29 of July meeting is what we're going to be watching and reporting on probably in the next couple of our weekly podcasts. The show for August will be the second Thursday. We hope you guys will join us for that. That is the week. We will see you next time.